Hi everyone, welcome back to the individual taxation classes, chapter 2, incomes and assets. So this video is in continuation of part 1 for the sources of all taxable income. So this is part 2 of sources of taxable income. In this particular video, I'll be walking you through in detail about the foreign earned income, and then we'll be discussing other income. So let's dive into to understand more in detail about both the category of income. Welcome to the US taxation class for the individual taxation. So we are on chapter 2. Let me present the notes and take a dive what we have done in the last class and what we have for today's class to cover up. So if you see in last class, we have started income and assets chapter 2. Here you can expect 21 question in your exam. In the last class you have seen we have covered 2.1 almost, which is type of income. We discuss and understand about wages, salary and tips. Then we gone through interest income, dividend income, rental and royalty income, gambling income and losses. And last we have done is income from waiver of debt in our last class. So there are two subtopic which were left over from the last class is foreign earned income, which we'll be covering today, and the other income. Then we'll be jump into the installment sale, cryptocurrency, non-business debt, and pass-through entity. So these all we'll try to cover. Installment sale probably will be covering in next class. That's a slightly bigger topic. But we'll try to wrap up cryptocurrency, non-business, bad debts and pass-through entity today. So we'll be covering foreign earned income, other income, cryptocurrency, non-business bad debts and pass-through entity in today's session. Right. So quickly take a look what all we have done: wages, salary and tips. Hope you got all these notes also, right? So in that we have covered what all comes under the wages, salary, tips, interest income, and some exceptions. So if you have remembered this format, in the second column we have type of income, in third column we have source for that type of income, and the last column we have exclusion. So we'll be covering like exclusion as well, which is not covered into the income or which you can exclude from the income from the respective category or respective source or respective type of income, right? So there we have, like, if you remember, in interest income we excluded like income from the bond of state or municipality, right? Education saving bond. Same way dividend income, there were certain exception to it which we have discussed. Rent and royalty income, which is refundable security deposit, you should not consider. Gambling income and losses, here we consider like future carry forward stuff also. And then income from waiver of debt, this we have covered in last class. So now today we need to start with foreign earned income. So foreign earned income, what is foreign earned income? First we will understand that, and then second, what all things can be excluded from the foreign earned income for the tax purpose in United States of America, right? So first let's understand what is foreign earned income. Foreign earned income is the income which an individual receives for the services rendered in the foreign country during the period he or she meet the following conditions. So first and foremost important thing is the person has received for the services he or she has rendered in the foreign country, but when he or she meet the following two conditions, right? First one is his or her tax home is in foreign country. So we'll be understanding what is tax home, but just as a principle, as a rule, keep in mind he or she has a tax home in the foreign country. Second is he or she meets either the bona fide resident test or physical presence test, right? So two condition, if an individual is meeting and he or she has some foreign earned income, then that income would be considered as a taxable income in the hand of individual in United States of America. But there are certain exclusion and deduction for which he or she can avail the benefit. So first, let's understand what is tax home. One second, really quick. unearned income. Yeah, sorry, I put it here. Rather, I should keep it there. So tax home. Yeah, there you go. So first, let's understand what is tax home, and then we'll understand bona fide residence test. So what is tax home? Tax home in a foreign country or countries is the place where an individual regularly live in the foreign country or countries, or if he or she is not living at that place, then the workplace of the individual would be considered as a tax home. So in the foreign country or countries, if an individual is living in multiple countries, right, the place where he or she is living, or if there is no place where he or she is living, let's say the person is living in hotel or guest house, right, then the working place of that individual would be considered as a tax home. So what are the two conditions to be met? He or she has a tax home in the foreign country. Second thing which is required is he or she meet either a bona fide residence test or a physical presence test. So what is bona fide residence test? Bona fide residence test, to qualify for the exclusion or deduction as a bona fide resident, an individual should be either the US citizen or a US resident alien who is a citizen of national of the country with which US has income tax treaty. So what does it mean? First thing is that person either should be a US citizen who has taken a birth in United States of America and who is being living in United States of America throughout his or her life, right? Second thing is the resident alien. Resident alien are the people who came from outside the United States of America and are holding green card, right? They are holding green card, so they are considered as a resident of the United States of America, right? But those resident must be from those country with whom US have a tax treaty, right? So US have tax treaty with many countries. So the person who is being considered as a resident to avail the benefit of exclusion and deduction from some foreign earned income, he or she should be either a citizen of the USA or the resident alien of the USA, but that residents must have a citizenship of the country with whom US have tax treaty. Make sense? Or any doubt here? Yes, no, guys. कुछ तो बोल दो.
Yes, sir.
Got it? US resident alien. And a US citizen is very straightforward, but US resident alien of those country with whom US have tax treaty, right? So key factor to be considered for a bona fide resident deduction or exclusion. First thing is length of the stay, and the second important thing is nature of the job of the individual, right? So length of the stay, we'll be discussing that should be more than 330 days in a year, and the nature of the job should be permanent, not temporary. So these are the two key factors one should be considering to evaluate the bona fide residence test. Second thing is the physical presence test. Physical presence test, when an individual physically present in foreign country or countries for 330 or more full days. So minimum 330 full days an individual should be in the foreign country or countries for during the period of 12 consecutive months. He or she will be qualified for the physical test. So if you see from the beginning, the first thing what we understood is a foreign earned income, which we all know what is foreign earned income. That income an individual has earned outside the United States of America for rendering his or her services to the outside of United States of America country, right? But there are certain exclusion and deduction available from the foreign earned income. To avail those exclusion and deduction, there are certain conditions that individual must meet. The first one is he or she must have a tax home in the foreign country. He or she must meet either the bona fide residence test or the physical test, one of these two, right? So tax home is mandatory condition first, and then one of the two condition, either a bona fide residence test or a physical presence test, one need to qualify. So what is a bona fide what is a tax home? That person must have a home where he or she is living in that foreign country. But if he or she does not have home, but living in, let's say, hotel or company's guest house, then in that case of scenario, the workplace of the individual would be considered as a tax home. So that condition is very easy. Second is bona fide test or physical presence test. What is bona fide test? To qualify for the exclusion or deduction as a bona fide resident, an individual should be either a US citizen or a resident alien of the country with whom US have a tax treaty. And the key factor to be considered is the length of the stay and the nature of the job. Length of the stay should be more than 330 days and the nature of job should be permanent, not temporary. Second is or a physical presence test. Even though the person may be having less than 330 days length of the stay in a one country, but he or she has lived in a multiple country for more than 330 days, or even though the work is temporary, but he or she has stayed more than 330 days, then he or she can qualify the physical presence test, right? When an individual physically present in a foreign country or countries for 330 full days or more during period of 12 consecutive months, then that individual is being eligible for the deduction and exclusion from the foreign earned income, right? So what are the types of foreign earned income? Oh, before that, there's a small note. US citizen or a US resident alien, worldwide income is taxable in US. That we all know, right? For the US citizen and the resident alien, all the worldwide income is being taxable in US, right? So what are the foreign earned income? First one is salary, wages, commission, bonus, professional fee, tips. These all comes under the earned income, right? And there are certain unearned income, so which you cannot consider for this deduction or exclusion. That include dividend income, interest income, capital gain, gambling winning, alimony, social security benefit, or pension benefits, and annuity benefits, right? So these are called unearned income. So you should not be considering that. And then third one is variable income. Variable income is business profit, royalty, rent, scholarship, fellowship. So for them, there are certain proportionate could be considered for the foreign earned income that we'll be discussing. So far, you got an understanding of what is foreign earned income before we jump into the exclusion part. Any
Yes.
doubt on what is foreign earned income? Rajat, Mayank,
Sir,
Vivek?
you talk about the variable income. So it basically varies that tax will be applied or not, or if the or the tax rate will be varied.
No, tax rate would be same, but variable income means like which is not your fixed income. Like salary is your fixed income. Your
Mhm.
wages are your fixed income, right? For that, you are rendering service. Professional services are generally fixed, right? So those are comes under the earned income, and whereas like business income is being variable, royalty is based on the number of sales, right? Rent is
Right.
also ideally it should be fixed, but I need to
Yes.
check why it is here.
So for the rent or
Fellowship
like
and scholarship is based on some achievements kind of thing,
yes,
right? Make sense?
yes, yes,
Hmm. So this is about foreign earned income. First, we understood what is foreign earned income. Second, we understood there are certain deduction or exclusion available on the foreign earned income. Hmm? And third, we understood the conditions that individuals should meet to avail the exclusion and deduction of the foreign earned income. First one is one should have a tax home. Second would be either he or she is a bona fide resident or qualifying the physical presence test, right? Then he or she can claim those exemption or deduction. So now let's understand what are those exclusion and deductions are. Look at right hand side. Taxpayer can claim exclusion from foreign earned income or exclusion from foreign housing or deduction of foreign housing. So two type of exclusion available. One is purely from the foreign earned income. Second is the expenditure that individual has incurred on his or her housing or foreign housing deduction if he or she has purchased any foreign home, right? So let's understand what are those exclusions. First one is exclusion from foreign earned income of US citizen and resident alien is up to 108,700 US dollar in current year from his or her worldwide income. For example, let's assume you have 250,000 worldwide income. So out of 250,000, let's assume you have 200,000 foreign earned income. From that 200,000 of foreign earned income, if you are meeting these conditions, which we have discussed in left hand side, then you can claim as a foreign earned income deduction of $108,700. For that, you are not supposed to pay taxes in USA. In addition to that, a US citizen resident taxpayer may qualify for the exclusion or deduction of foreign housing for certain foreign housing amount. To claim any of the above exclusion or deduction, a taxpayer must meet all of the following three conditions. What is the first condition? He or she must have a foreign earned income, right? Second is he or she must have a tax home, which we already agree, which we have already discussed in left hand side. Third, or he or she must have one of the following. First one is US citizen must be a bona fide resident of the foreign country. US resident alien who is a citizen or national of the country with whom US has tax treaty. Third is US citizen or resident who physically present in the foreign country for at least 330 days. That means bona fide test or a physical present test should be done. Then look at the note here. Individual foreign earned income from the working on a temporary assignment in a foreign country is not qualified for exclusion or deduction from foreign earned income. That means if you are being outside country for a temporary work, then you should not claim the foreign earned income exclusion or deduction. If you are in foreign country for some permanent nature of work, if you look at second point, it says individual foreign earned income from the working on indefinite assignment, that is permanent assignment in foreign country, is qualified for the exclusion or deduction. So you can exclude or deduct the amount from the foreign earned income only when you have a permanent foreign earned income, right? Not the temporary one. And the exclusion will be 108,700 from the foreign earned income and certain deduction on the housing expenditure which you have incurred, right? That we will be discussing as and when you incur those housing expenses, right? Any doubts so far? What is foreign earned income? So there are two type of deduction. One is 108,700, that is direct or from the foreign earned income, and the another one is how much expenditure you have incurred on the foreign housing. So that also you can exclude. Sounds good? Any doubt? Shall I move forward to the next point?
Yes, sir.
Okay, so second thing is other income. So other income have few categories. First one is scholarship and fellowship. What is scholarship and fellowship? Any idea? Any idea what is scholarship and fellowship? Come on, guys. Are you with me?
The scholarship means financial help given for your um, extraordinary skills. Studies.
Yeah, Mayank, Rajat, Vivek.
So from my point of view, scholarship is that the guy has earned some money for pass an exam or won a competition, and for the amount he has received from that.
Yeah, Vikas sir. Any idea what is scholarship and fellowship is all about?
Sir, I was in lift actually. I couldn't hear the point. So I just.
What is scholarship and fellowship?
Sir, scholarship is the subsidy sort of thing granted by the university for studying in their campus or pursuing the courses. And fellowships again is something that has to do with the PhD things. Like again, it is in simple words, it is just a grant given by the university.
Any other thing comes in your mind other than grant?
Fellowship is like some short-term courses for some additional upgrading of your skills that are sponsored by the universities, like the postdoctoral research, something like that.
Yeah, so there are different type of scholarship and fellowship. So these both are like different terms. Scholarship is basically based on your meritorious of the student. If let's say college or university is providing you some scholarship to study in their college, right? So and fellowship is generally for like masters or PhD student. I have seen in my experience, like they get the fellowship. For that, most of the time they need to do certain duties in lab, certain trainings to the junior students, or they need to take certain classes also, and in compensation of that they receive certain fellowship, right? Because sir, in PhD student they also get the fellowship from the college and university, right? Vikas sir, can you hear me?
Yes, sir. Yes, sir. PhD
Right.
students, sir, PhD students only get a fellowship because
Yes.
they need to teach in the campus. They need to teach the classes of the professor and all those things.
Yes.
So PhD के बच्चों को ही fellowship मिलती है, sir.
Yes, so most of the time I have seen like masters and PhD student, they do like some duties in the labs. They do certain vigilance duty. They take certain classes for first year, second year, or lab student, and to compensate that they get certain fellowship, right? So that is like scholarship and fellowship program is. So here is the thing. So whether all scholarship and fellowship is taxable or there should be some exclusion to it. So there are some exclusion to it, which include amount received as a scholarship only and only for the tuition, course fee, books and supply. If the scholarship has been received for the room rent, for boarding, so that is being taxable, right? If scholarship is being received for the tuition, course fee, books and supply, that is excluded from taxable income. But if it is for the room rent and boarding, then it is taxable. And the fellowship, if an individual receive for performing certain services, tasks, training, teaching, then it is taxable. But if fellowship an individual receive only and only for tuition fees, course fees, books and supply, then it is exempt, right? Any amount as a fellowship in the name of fellowship or scholarship, any non-degree student receive, then that is also taxable. For example, like in EY, they give scholarship if you qualify enrolled agent. They give scholarship if once you qualify the CPA exam, right? That is taxable in the hand of the individual which they receive, because that is a non-degree candidate. This is being applicable only for the degree candidate. Make sense? Exclusion is being available only for the degree candidate. Make sense? Or any doubt coming in your mind? Huh? Mayank, Rajat, Shubham?
No.
No, sir, not yet.
Clear? So generally, scholarship and fellowship is considered as a taxable income. But if it is for tuition fees, course fees, books and supply, then that amount can be excluded from the taxable income. But that should be for the degree program, not for the non-degree candidate. Simple? Shall I move on to the next point? So far, so good? Huh?
Yes, sir.
Mayank? Rajat?
Yes, sir.
Next is bartering income. What is bartering income? Any idea what is bartering income? I'm sure
Which
in
no-
your graduation.
which does not involve money, like some plumber is doing plumbing work for dentist. Dentist is providing, dentist is filling his cavity. So the plumbers both are exchanging their services, and money is not involved.
Yeah, very good example. Very good example. Yeah, anyone else would like to add what is bartering is all about, or any example you would like to share? In the news and media agencies, it happen a lot. You know, like this doctor and plumber is like kind of one of the case. But I like the way you explain it. You know, plumber, you, for example, like I'm a doctor, I have invited a plumber to do some plumbing job. In return of that, I'm doing his teeth cleaning. That's a very good example. But generally, like in market, if you see in the news agencies or media, there are a lot of bartering thing. Right? For example, like New York Times, they can do the barter with the you can say CNN, right? So where like CNN can put their ad into the New York Times, and New York Times can run some ad of there into the CNN, right? So that's generally happen. So how do you calculate that value of that bartering? So it's based on the fair market value of the goods and services you have received. So what is the value you will be considering for the service provided is being the goods and services, fair market value of the goods and services which you have received. Make sense? So for the bartering income, how do you calculate the value? At the fair market value of the goods and services received in exchange of goods and services you have provided to other person. So for example, if plumbing work is, let's say, of $400 and teeth cleaning, you generally charge, let's say, $500. So you have provided the services of $500. So for you, the fair market value of the plumbing services which you have received is $500. Make sense? Yep.
Yes, sir.
Shubham, Rajat, all good?
Yes, sir.
So whenever there is a barter exchange, it required to file a form 1099B of all the transaction unless they meet certain exception. So general rule is form 1099B for the barter transaction, right? Next is hobby income. What is hobby income? Any idea? Any idea what is hobby income or any thought?
So side income,
Side income means?
like well, if someone has a hobby of cooking and he's earning
Mm-hmm.
from just sharing his post about cooking, and so that will be like a hobby.
Yeah,
Hobby
yeah,
is cooking. So
yeah.
he's
Someone is singer. Yeah, someone like singing or he's doing certain shows, right, as a hobby, and he or she is getting some money. Yeah, that's very true though. So hobby income, it can be considered as a business income if it meets the following condition. First one is profit earned in 3 out of 5 consecutive years. So in previous 5 year, out of 5 year, at least in 3 year, you have earned a profit. Second is in case of hobbies like breeding, training, showing, racing, horse racing, profit earned should be at least 2 out of 7 consecutive years. So other than breeding, training, showing, race horse, for rest other kind of hobbies, let's say you have hobby of playing football or cricket, badminton, right? And you go and participate in various competitions or matches, and there you are earning something. Or if you have a hobby, like ma'am, you said about cooking, and you are doing cooking and coming up as a master chef, and you are earning some money out of it, right? So in that case of scenario, 3 out of the 5 year. But if you have a hobby of training, showing, horse racing, then 2 out of 7 consecutive year. If you have earned the profit, then that hobby can be considered as a business income. If taxpayer wish to consider hobby income as business income despite of the fact it is not meeting this above condition, then burden of proof is on taxpayer why he or she wants to consider hobby income as a taxable income, right? And there is no exclusion to it. Make sense? When hobby income is considered as a business income, huh? When hobby
Can
will be
be
considered.
how it can be profitable.
How it can be profitable. For example, if you are a chef and you are cooking and selling, for example, anything you have cooked, and you are earning some money out of it. If you are a singer and you are going to the shows and singing over there and getting some money, if you are a player and you are doing the matches, from those matches you are earning some money, so it's a profitable. Make sense? Anji?
Okay, clear, clear.
So, in case of horse race training, showing, so you have to have 2 year profit out of the last 7 year, but in any other case, 3 year out of last 5 year. If you are not meeting these condition, but still you want to consider your hobby income as a business income, then the burden of proof is on you why you want to consider it as a business income. So why the text maker has put so? Because people do have a hobby, and generally they show the loss on the hobby, and they want to consider that loss as a business loss and wanted to set off with their normal routine income or carry forward for the future period. That is the reason this law has been made. Now makes sense. For example, if you are a businessman, right? and you are earning $1 million from your business, right? And you have a hobby of singing, and you have organized, let's say, show, 4 shows in a year, and on that show you have incurred, let's say, $100,000 cost, and you come up with the $10,000 of revenue. That means on each show you have end up with the loss of $90,000. That means $360,000 loss you have incurred on your hobby, right? Can you set off that loss against the business income of $1 million? The answer should be no. It's
No.
your hobby. If you are incurring loss on it, why should I be bothered about it? Why you should not be paying tax of it, right? What is personal income? Are you getting my point? Hello?
Yes, sir.
Are you guys getting my point? Why this law has been made it like this? For example, I have a business and I earn $1 million in a year, and my hobby is traveling and blogging. I make travel blogs, right? So for that, let's say I traveled in 5 countries and make the blog, put on the YouTube channel, but I'm not earning anything out of it. Can I claim all those expenses to set off against my business income? Answer should be yes
No.
or no. Answer
No.
should be
No,
no,
sir.
right? If you are a hobby of traveling and blogging, so who cares, right? So
That's a
you are
personal expense.
that's your personal expense. You should not be claiming that as a business expense, right? So otherwise, like every businessman do have some or the other hobbies, right? They will start, if they start claiming their hobby expenses as a business expenses, then no one would on the earth would be paying any taxes. Make sense? Mayank, Rajat,
Yes, sir.
Yes, sir.
Vivek, make sense? Okay,
You
so
mentioned
next,
about
huh?
you mentioned about the expenses,
Yeah,
right? My question is that if a person is uh, generating income through that hobby, right? Like for example, I am an engineer. I am working in a car manufacturing company. Also, I have a garage at my home where I fix cars.
that is your business income. That is your
And is it
business.
mandatory to do that as a regular income, as a business income, apart from the income that I am earning regular?
Yes, that's your business income. Hobby means like singing, dancing, cooking, traveling. What is hobby? Repairing cars should not be your hobby, yeah? That may be your passion, but not hobby. Right? That's a difference. Like for example, for me, my passion is teaching, right? But it's not my hobby, it's my business. My hobby may be like swimming, my hobby may be dancing, or my hobby may be traveling. So there's a difference between your passion and your hobby.
Got it, sir.
Cool. Next important topic, extremely important topic, which you may see almost in second income tax return of the United States of America, is alimony, right? So alimony and separate maintenance payment. So this, I think we touch based in very first class, where we have discussed certain definitions or key term, right? If the alimony pay is for the divorce decree issued on or before December 2018, then the recipient would be considered the alimony as income, and the person who is paying would be considered as an allowable expense. Whereas if the alimony is being for the court degree on or after December 2018, in that case of scenario, neither the person who is paying alimony would be considered as expense, nor the person who is receiving alimony would be considering it as income, right? This is what we have discussed earlier. Yes, no?
Yes, sir.
Right?
Yes, yes,
So
sir.
if you see, alimony received based on the decree awarded before is included in the income and paid is excluded from the income. Now, if you come to the right hand side, however, any alimony received or paid based on the decree awarded after December 31st, 2018 is neither considered as income nor considered as exclusion, right? But if there is any receipt or payment toward the child support, what is child support? When husband and wife, they have a child and they got divorced, and now who will take care of the child? Who will bear the expenses of the child? For that, if someone is paying as a child support, even for the divorce degree awarded before 2018, is neither included in the income of the recipient or expense of the person who is paying. So child support was never be the income nor be the allowable expense. Always be a personal expense, right? Whereas alimony was earlier income and exclusion, but after 2018 divorce decree, it is also considered as a personal matter, right? So child support will never be treated as alimony. Another thing is transfer of property. In case of divorce, right, there might be a possibility of settlement by alimony, settlement of child support, but there might be a possibility of transfer of property, right? Maybe in 2018, you might have heard about Jeff Bezos have got a divorce. You know how much property he has transferred to his wife? Any idea? Any idea or any guess you can make? Have you heard about this case?
Sir, I've heard about the divorce, and just got to know that many of, like, he also got a benefit also, like, got to know, sir.
Yeah, no. Like it was a big news in US back in 2017 or 18 when they had a divorce. So, like,
Gave, I think, around 4 or 5% of the share of Amazon.
yeah, you can Google it out. Just try and see how much is the amount and how
$20
much
million.
is $40 million.
No, sir,
So
20.
$20 million? No, more than that, I think so.
So dollar 160 billion at the
Oh
floor.
my, oh my God. So there was a news that's the best investment her wife has made. She married with Jeff Bezos couple of years back, and in couple of years is she got like that much billion or million of dollars because of alimony and transfer of the property under the divorce degree, right? So under the divorce degree, when someone receives the property, how to treat that property? Will that property be taxable in the hand of the individual who has received or not? Or if taxable, then how to treat it? If not, then how to treat it, right? And then in future, if that person wants to sell that property, then how to calculate the capital gain? That's the question, right? So if you see, transfer of property between the divorcing spouse in exchange for release from marital obligation is non-taxable. That means all the money she has received is non-taxable. But the basis of the transfer of property will be the same as in the hand of transferee. That means if Jeff Bezos has purchased the share of Amazon, let's say for $100 each, and now it is, let's say, $2,000 each, right? And she got, let's say, around $100 billion of the shares of Amazon. And now if she wants to sell, then her cost would be considered as the $100, not the $2,000 what she has received. Make sense? For example, let's say Mr. X has a household property of $100,000 which he has purchased, right? In the divorce decree, court has advised to transfer this property to the spouse, right? At that time of decree, let's say fair market value of that house is $200,000. That means the valuation which the spouse has received is $200,000, but it's not taxable in her hand at the time of divorce decree or transfer of the house. But after a year, the spouse wants to sell that house. Let's say after a year, spouse received $300,000 for that house, and the spouse wants to sell that house for $300,000. So in that case of scenario, the capital gain would be on $300,000 minus $100,000, which is the original purchase price. So on $200,000, the spouse need to pay capital gain tax. Make sense?
Yes, sir.
So this is about alimony received and paid, child support service, and transfer of property in case of divorce decree. Right? So far, so good?
Yes.
Yeah, man, you're
Yeah,
saying
clear.
clear? Okay, so next one is military combat pay. So military combat pay is taxable income. However, there are exclusion to it. So exclusion will be entire month pay on which that person is on military combat. That means the person is in combat zone or the soldier is in combat zone. Combat zone is fight zone, right? For example, currently in Ukraine, if let's assume in Ukraine, US military people would go there, then for them it will be considered as a combat zone. If back in 2000, I think 8 to 2020, if you have seen, the US military was there in Taliban, right? Have you heard about those news? The last year, like US military had vacated Taliban. Have you guys heard about that news?
Yeah, heard about that. Yeah.
So,
Yes, sir.
yeah. So when those military people of the United States of America has been deployed in a country like Taliban, for them it is considered as a combat zone, right? So for the number of days, if for example in a month, one person is in the combat zone for even a 1 day, for the entire month salary would be excluded for tax purposes, right? So you need to consider the entire month salary as an exclusion if the individual is in combat zone during a part of the month as well. Second is hostile fire or imminent danger pay received, right? Any firefighting expense or any danger zone expense or any extra benefit that individual received. Let's say if you look at 2 years back when there is a fight in Iran, right? In that case also there were US soldiers deployed in the Iran for that fight, right? So that was the difficult time for the US soldier also, and to go there, because like all over the Iran there was like a lot of similar situation what we have in Ukraine these days, right? For in that case of scenario they have paid like extra money to those soldiers and to their family. So those money is also being considered as tax-free, right? Any bonus, any hospital, medical expenses during the combat period, it's all completely excluded from tax purposes. Make sense? And even though if the soldier is in combat pay area, right? In that case of scenario, the deadline for filing the income tax return will also be extended for them. So they will not be, there would not be any interest penalty for them for filing delay, because for them extension is being provided by the President of the United States of America. Make sense?
Excuse me, what is re-enlistment bonus?
Re-enlistment bonus is, for example, if someone has got injury in the combat zone, right? So for that, like any injury bonus or any lifetime bonus being provided.
Okay, okay.
So this is about military combat pay. So far, if you have seen, we have covered foreign earned income in detail. Then we jumped into other income, scholarship income, bartering income, hobby income, alimony, military combat pay, right? Now we are jumping onto the cancel debt. What is cancel debt? Any idea what is cancel debt?
The waiving of a loan due to bankruptcy, insolvency, or some other reason.
Yeah, so debt may include, like two category of debts are being. One, like the person to whom you have given goods or services, and he or she or the company need to pay you money for those goods and services which you have rendered, right? That is your account receivable mainly. The another could be to whom you have lended the money, have given the loan, right? So how do you account for? If you see left hand side for account receivable, so first the person who is receiving the money, they will be debiting cash. Debit what comes in, credit what goes out. We all know this basic fundamental. Do we all know this basic rule of accounting?
Yes.
Debit what comes in and credit what goes out. So the person who is receiving the money will debit the cash and credit the loan payable. Let's say the person is receiving $100,000 cash. So the recipient will be debiting cash and crediting loan payable. The person who is providing that loan. So in his book, if you see right hand side, loan receivable account debit by $100,000 and cash is going out. So crediting the cash account by $100,000, right? This is the first entry. Second entry is, let's assume after 6 months, the person whom you have provided $100,000 is not in a position to pay you back. And now finally, you both got into a settlement that give me $60,000 and $40,000 I will waive off, right? In that case of scenario, the person who is receiving waiver, would it be his or her income or not? Are you getting my point? For example, let's assume there is two persons, Rajat and Mayank. So Rajat has given $100,000 to Mayank on, let's assume, on 1st January 2023, right? So what journal entry in the Rajat will be making in his book? Loan receivable account debit to cash, or maybe Mayank account debit to cash, right? And Mayank, who has received $100,000 cash from Rajat, he'll be saying cash account debit to loan payable to Rajat, right? And after 6 months, Mayank says, I don't have money to pay you back. Then what Rajat will do? They will discuss, they get into a mediation, and then they probably, let's assume, like Vivek has done their mediation, and they reach to a conclusion, let's settle the amount with the $60,000 on 30th June 2023, right? On 30th June 2023, Mayank is ready to pay 60,000 to Rajat. So will the 40,000 money which Mayank is paying less, is it Mayank income or not? Are you getting my point? What I'm
Yes,
saying?
yes, it's income.
Will it be the Mayank's income or not?
Yeah, income. Considered
Yes,
an income.
Mayank, Rajat, Shubham,
Yes, sir.
right? So if it is his or her income, then what journal entry that Mayank will be making in his book? He is foregoing the loan. So when loan is foregoing, so that will be debited. That means earlier loan was credited. Now it is debited to knock off the loan, right? And how much cash is outgoing? $60,000. For that they agree to settle. So credit 60,000, cash what goes out, right? Credit what goes out, and then the income 40,000 is income on cancellation of debt. Make sense?
This will be from the receiver side.
Yes, this is from the receiver side. Now, what Rajat will account for? For Rajat, this 40,000 is loss. Yes, Mr. Rajat?
Yes, sir.
So how do you account for this loss? You will be receiving a cash of $60,000. Debit what comes in? 40,000 cash account debit, 60,000, right? Then loan receivable was 100,000. So that you are foregoing, so that you will be crediting. So difference is the loss on cancellation, $40,000. That's how you will be booking into your account. So here on the cancellation of debt, we have seen one party is booking income and another party is booking loss. Make sense? Yes, no?
Yes.
So this
Yes,
is
sir.
how the accounting treatment or tax treatment one should be doing for the cancellation of debt. Second scenario, let's take another example. Here, let's assume Shubham has a business of selling JCB machine and Sachin want a JCB machine. So Sachin come to the Shubham and he said, give me this JCB machine for, let's assume, $100,000. And Shubham is ready to give that machine to Sachin at $100,000, right? So if you see the example 2, buyer, let's assume Sachin is buyer and let's assume Shubham is seller. So what Sachin will be accounting? Machinery, JCB machine, $100,000 is debit. So it will be creating asset in the books of Sachin, right? And for that, Sachin has a loan payable of $100,000 for the JCB machine, right? On the other hand, what Shubham will be accounting for? Loan receivable from Sachin, account debit $100,000 to sale of machinery, sale of JCB machine, let's say $100,000. That's an accounting entry you both will be making in your books. Yes, no?
Yes, sir.
Right? And now, after 6 months, Sachin gone bankrupt. And Sachin is not in a position to pay back to Shubham. Then what Shubham will do and what Sachin will do? They will invite Vivek to do the settlement, right? And then let's assume Vivek, Sachin and Shubham has agreed for a settlement to pay $60,000 for the JCB machine, and let's keep JCB machine with the Sachin, right? So in that case of scenario, what exactly is happening? Have Sachin got any gain or have Shubham got any loss? Have Sachin got any gain or Shubham has got any loss?
Yes, sir.
The one who gave the machine has got a loss.
I
The
got the
one,
loss of $40,000.
say that
Wow.
again.
Sir, I got the loss of $40,000.
Yeah, so Shubham has got the loss of 40,000 and Sachin has a gain of 40,000, right? So in this case of scenario, when it is for the capital asset, in case of the buyer, you will be adjusting the loss from the base value of the asset. So you'll be reducing the value of asset in the books of buyer rather than considering it as a gain. This is also possible, or the alternative treatment which we have discussed above, you can consider the gain upfront. But most of the time, practical experience says when the person do not have money to pay to the buyer, how he or she can be paying taxes, right? So practical experience says normally in such scenario, the base value of the asset got reduced. Because if you consider that as a gain for the Sachin, then he need to pay taxes, but he don't have money to pay taxes, right? So it is better to use reduction in the value of asset. So there are two things possible in the books of Sachin. First, he can reduce the amount from the fixed assets, that is machinery. So that is loan, first like settlement of the loan account debit from credit to debit to cash which he is paying back, and to the gain on cancellation of loan. This 40,000 gain on cancellation of loan will be adjusted against the machinery. If you see the next journal entry, cancellation of gain account debit to machinery. So machine book value after this settlement would be $60,000 in the books of Sachin. But for Shubham, it will remain same as a loss. So there is no different treatment. Cash account debit, loss on cancellation, debit to loan receivable. Make sense? Yes? No? Are you guys with me? Hello?
Yes, sir.
Yes.
Got it? Or any doubt? Is this example? Have you understood this example or any doubt you have? Yes, Shubham, Mayank, Rajat, clear?
सर ये लाइक जो ये हमने फॉर द बायर लाइक वी कैंसिल, जो हमने ये गेन को कैंसिलेशन करा है ये इसलिए करा है ना क्योंकि बिकॉज जो हमने सर ये कैंसिलेशन ऑफ डेट डेट पढ़ा था जब लास्ट क्लास में, जो उसकी एक्सेप्शंस थी उसके अंदर ये था कि लाइक कैंसिलेशन ऑफ डेट ड्यू टू इंसॉल्वेंसी एंड अदर थिंग्स में डेट वुड बी एक्सक्लूजन फ्रॉम इनकम. या
Yes.
ओके सर, थैंक यू.
So when a seller cancels the buyer purchase indebtedness, the buyer can generally avoid income recognition by electing to reduce the basis of property by amount of debt discharge and cancellation. So here in case of bankruptcy, the person rather than considering the cancellation of debt as a gain should reduce the value of the asset to the extent of the amount reduced in the loan settlement, right? Discharge of debt, debtness due to debtor or borrower in case of insolvency or federal bankruptcy law is generally not included in the gross income, but is used instead to reduce the basis of asset. Same question which you are saying, Shubham, right?
Yes.
Next is shareholder cancellation. If loan is taken from the shareholder and company is not able to pay it back, then how you need to treat that in the books of company or in the books of shareholder? So shareholder cancellation of the corporation indebtedness is treated as a contribution to capital. So it will be added into their share capital. Make sense? Another thing is student loan. This is also important. So student loan by some state or tax exempt charitable institution. Cancellation of debt is excluded from gross income of the student because there are certain states which give the loans to the student and they request the student should join their state only. Students should work in their state only and then they forgive the loan. For example, like in last class, we discussed about farmer loans, how we repay every year in India. Same way in US, student loans are also most of the time waived off by the state or by the center. So that would not be considered as income of the individual if it is being waived off by any federal government or state government scheme. Right? TCJA Act 2017 excluded any income resulting from discharge of student debt due to death or disability for discharge of student loan after 17 before 26 for any reason. If student has died, then in that case of scenario, the debt which is waived off should not be considered as the taxable income of, you can say, hirer of that individual or executor of the individual. Make sense? So this is all about other income. Now, shall we take a quick break and then we can continue with this passive income or another topic? Shall we take a quick 20 minutes break? Yes, no?